Hi all, and welcome to the Affinity and Deal Room European Unicorn Trends webinar. We're going to talk a little bit around how to make unicorn hunting more predictable. Today we're joined by some really great guests. I'll let them introduce themselves in a second, but we've got representation from Octopus, from Antimus, and from Deal Room, who've been providing us data on this. So I'll leave it to the guys now to introduce themselves, and then we'll dive into the report and some questions. Nick and Alex and Orla, do you guys want to introduce yourselves and give a little bit of background?
Alex, you want to go first?
Sure, absolutely. So hi, I'm Alex Mail. I'm a principal here at Antimus Group, working on the early stage team, investing into seed and Series A companies in financial services. So not just fintech, but companies that distribute financial services, companies that rely on financial services. Really broad view here we take at Antimus. Antimus is a company that's been around for about 10 years, investing in multiple different stages of startups, investing globally.
Cool. And I'm Nick. I'm also a principal at Octopus Ventures and sit on our early stage fintech investment team. So at Octopus, we back founders generally between 2 and 10 million with the first check from us. We also have a really super early stage fund called the First Check Fund, which lets us come in at the angel rounds, and then we have a growth fund which is on top. And in terms of our fintech focus, it's really broad, but within the fintech landscape, we also do quite a lot in crypto as well. We look at them as one and the same. And yeah, I've been with the team for about 4 years.
And I'm Orla. I'm head of content at Deal Room. We are a data provider on startups and venture capital globally. And I lead our intelligence unit, which works on lots of the kind of insights that we're going to be going through today.
Cool, thanks guys. I'm Tom Hughes. I lead sales for Affinity in Europe. Cool, so look, guys, let's dive in. So this report is coming out in 2 days from now, so it's going to be available. The idea of the report was to put a European focus on the global unicorn data that we have available, but also we'll share some insights around what we've seen trend data from Affinity customers, but also more broadly around unicorn trend data in Europe. So Nick, I'll go to you first. The data I've got in front of me here, if we look back in 2017, 60% of the top 20 unicorns were founded in the US, and only 10% were based out of the UK. I think when we look at the numbers now, certainly in 2021 in the report and on from then, 1/3 of European unicorns were based in or founded in UK, and the UK has continued to outpace most other European countries in attracting unicorn level investments for startups. Why do you think this is, and has, I don't want to use the word Brexit, but has a departure of UK from Europe been a significant factor?
I think it's a good question. I think there's probably 2-3 reasons why. Well, there's probably more, but in my view, it's 2-3 reasons why. One, I think the UK venture market matured quicker than some of the other investor spaces, and that just led to access to capital being easier for early stage founders. If you think about it as an ecosystem, you need lots and lots of great early stage businesses, and some of those will grow and become these unicorns. And I was a founder once myself, and it's can be quite challenging finding early stage funding. So being in a market where it's there's more available just increases the chances. And I think the second part is talent. So you were seeing great, really smart individuals wanting to work in the UK, wanting to join these UK businesses, and the combination of fantastic talent and capital leads to great outcomes. And actually, I think with the Brexit stuff now, that is probably going to be causing issues, but you're also seeing investors now looking across Europe, right, and launching more satellite offices or even headquartered outside of the UK when looking for that investor space. So you'll see that probably it balancing out a little more across Europe and not being so concentrated into the UK.
Would you say the investor landscape, the ones who are participating in early stage and certainly sort of the later stage, the diversity of where those investors are based is changing as well in the last 2 years?
Yeah, I think on the later stage, you're seeing more American VCs coming in to Europe. And I think there's a bunch of reasons. So you're seeing more foreign investment come in. I think back in 2017, which is one of the reasons we launched our growth fund, there really wasn't that many options for great founders raising these growth rounds. You know, if they weren't getting investment from US funds, that has changed significantly. And I think you're even now seeing some of the growth funds investing much earlier than they historically did, which shows you that that market has matured in its own right, which is great, you know. And it's that's probably going to lead to these, you know, you talk about unicorns, but even outcomes that are even bigger, like, you know, multi-billion outcomes.
Yeah, I think decacorns is something we're going to touch on later on. It's something that came up more and more in this report than it did in previous years. Thank you, Nick. Orla, I'll jump to you for the next slide. So when we look at 2021, I know you have even more recent data, which will be great to hear about, but in 2021, when we looked at this, Europe has produced 75 new unicorns in 2021, which was 5 times the total number that were produced in 2020. What do you think are some of the factors that drove this? Nick already touched on some, but what have you guys seen from the raw data?
Yeah, I think it's a number of things. I mean, obviously, we know that 2021 was a enormous year for venture and for startups globally. Global venture capital figures were kind of double that of the previous year, much bigger growth than we'd ever seen before, really. So that kind of is a factor, but really it is also a continuation of a trend of what was happening in Europe anyway, which is a maturing ecosystem. There's a lot of companies that were, you know, these companies weren't born overnight. They're companies that have been around for best part of a decade, and they were getting to maturity. And I think that's something that was kind of an inevitability, and we're seeing that kind of ramping up year on year. I think that there is also a lot more confidence in Europe from international investors, as Nick was saying. Like we now see in the UK, for example, 75% of all investment comes from outside the UK. And that's generally a sign of a maturing ecosystem, because you know, people often say like seed is local, Series A is regional, and after that you need to look globally for kind of B and beyond. And there's been a growing confidence in Europe as a place to that's able to breed and support unicorns.
Wonderful, that's great. That's really interesting, actually. And what, if anything, have you seen in the trend indicators in regards to, this was 2021, what have you seen in the last 6 months? Is there anything you kind of give us on that?
Yeah, I mean, it's kind of still early-ish days. Of course, there's a lot of, in terms of being able to see it kind of coming out in the data, but VC is a kind of lagging indicator in the sense that often deals that will be closing now were kind of in the pipeline 6 months ago. But we are seeing a slowdown everywhere in terms of VC invested. If in terms of how Europe is faring, it looks like it doesn't have the same level of pullback as we're seeing in the US. That might be based on, you know, maybe there was a bit more of a inflated kind of valuations and things happening in the US, or maybe it's just going to be a bit more of a delay until it hits Europe. That'll be kind of interesting to see. But yeah, so far it's certainly at later stage is what's being kind of crunched the most. Early stage still looking pretty resilient, and yeah, certainly Europe standing up stronger in 2022 compared to the US versus 21 months.
Well, I mean, there was news just yesterday on you and Blair's Metaverse doing a pretty sizable late round as well. So there's still some froth out there as well, some big deals going through. So
yeah, exactly.
Full year numbers. And again, when we do this at the end of the year, we'll be able to give 2022 numbers. Cool, thank you, Orla. Alex, I'm going to go to you next just a little bit. We're just going to dig into some of the sort of regional numbers that we saw. So one country that we saw bucking the trend in 2021, kind of moving away from UK being the #1 in regards to growth of unicorn numbers. We saw 300% growth between 2017 and 2021 compared to 230% in the number of new unicorns. Is there anything specific about this market that you believe helped drive this? And do you think, and I mean, or maybe everyone can chime in, do we think that's going to continue going forward throughout the rest of this year?
Yeah, so I think, as we already mentioned, the UK and the London ecosystem was faster to develop than the rest of Europe, and so I think what we're seeing here is a correction, basically an upwards correction from Germany catching up in terms of going through their own growth spurt and development as a market. If you look at population numbers, which are, you should always correct for these types of things, Germany has a higher population than the UK. So I think should these two markets reach the same level of sophistication and relative acceptance from the global investor community, then we would expect long-term ceteris paribus for Germany to have a high level of unicorns in the next 10, 20 years than the UK. Now, that said, you can't not ignore the level, that said, you can't ignore the geographic distribution of Germany. I think if we've learned anything, is that it's nice to have a concentration in a single city or in maybe one or two cities. Germany is relatively multi-centered. And so if you are looking at, say, Berlin versus Frankfurt or Hamburg or any other places where you might find a startup, it's much more advantageous for the talent to be in a single place, and there to be just that slightly less friction. It seems very minor, because it's not too hard to travel between cities in Germany, but this type of thing does compound and it does add up over time. I would say one thing more, which is that if US investors are starting to wake up to the prospect of Europe, they may in the past have actually not really counted the UK as part of Europe. And certainly it's not part of the EU now. And so when US investors are looking at Europe in general, maybe the first thought that comes to mind is, oh, let's do some German investments, or let's put a base right in the middle of Europe where we can transit easily to Nordics or to France or to the other centers that we're seeing. So yeah, exciting times for Germany. And I think as we start to see more big exits there, we can see the ecosystem developing further.
Awesome, that's really interesting. Interesting how to see how the distribution of population is going to affect. So I will at the end of the webinar ask you guys for your predictions on new countries to focus on, or maybe ones that might be interesting. I think prior to this we discussed some of the CEE countries, which are looking quite interesting now, and stuff like that. Thank you very much. So Orla, I'll go to you next, if that's all right. So based on the numbers from 2021, Europe is home to 65 unicorn cities. I know that's actually increased. We've seen new surprising unicorns all over Europe this year, but places where at least one unicorn were founded, we counted 65 separate unicorn cities. That's more than the United States or any other continent. Do you think there's anything special about Europe that promotes a less centralized startup ecosystem? And this is all in thread, is what we've been speaking about so far. Is there any unifying stuff you're seeing in the data that's supporting this kind of less centralized startup ecosystem?
Yeah, I mean, I think that's really interesting. That there are, I think a lot of people, when they think about European tech, they think, Berlin, Paris, Amsterdam, London, Stockholm, and maybe not much else. And actually there's another like 60 cities that have created at least one unicorn. And I think that, yeah, again, there's a number of reasons. I think, Europe's got a history of having great research institutions, which might not necessarily be in the capital city. Places like Oxford or Cambridge, for example, have created multiple unicorns. Manchester, Bristol, that's just in the UK alone. But Munich as well, Leuven, places like this that are centers of innovation in a sense, and you end up with entrepreneurialism kind of spinning out of those places. So we don't have the one big hub of Stanford in the Bay Area, but actually we've got this distributed network of amazing innovation that is producing cool companies all over the place. And I think that it makes, I'm biased, but it makes kind of this kind of data all the more useful, and kind of Affinity's insights as well, because it means that if you want to find the next unicorn that's going to pop up out of Lithuania, and you don't have somebody on the ground there, well, you need to find a way of making sure that they're on your radar. And we can also be more interconnected as an ecosystem. I think, Nick was saying he's at Money 2020, there's London Tech Week next week, Viva Tech, events like that. It's really cool to get people in the same place. But equally, yeah, it's hard to keep track of what's going on in Croatia, or make sure that you don't miss UiPath coming out of Romania, for example.
Yeah, exactly. I mean, I even like for me as an Irish person with the flip dish deal, and you're seeing new unicorns pop up everywhere. I mean, Lisbon has come, in the last 5, 6, 7 years, has become a real amazing tech hub as well. So it's super interesting to see. I'll put this out to any of you guys. Do you see, we've spoken about ecosystem a little bit. Do you see the role of accelerators, NGOs, government bodies, working closer with VC and other investor styles to support these sort of emerging ecosystems, these emerging sort of unicorn cities?
Yeah, I think it's amazing when you have like a city or even a country that's never had a unicorn and they get their first 1 or 2 or 3, and that really just brings attention to them, and it's really tough pre having that to sort of get these companies recognized and help them get access to capital. And it's funny because when you're sort of on the inside of venture capital, you seem like you know everyone. It's really easy to speak to pretty much any fund you want, but when you're on the outside, it can be really just pretty closed actually. And so I think there's a huge role with all of these accelerators, particularly ones in cities where there's less attention, to bring their companies to the forefront, either going to these conferences like Ola mentioned, or actually just running like investor office hours and building networks into funds who can potentially make those larger ticket rounds, which in those markets they probably won't have investors who can write 10+ million checks, and that's getting them access to that.
I think one of the nice things that we saw in the, sorry, do you want me to?
No,
so
you go.
I think one of the nice things, I'll do it again. I think one of the nice things that we saw in the London ecosystem was the regulatory sandbox that was set up by the FCA, and the exporting of that policy and the exporting of that type of framework to a number of countries worldwide has been super interesting. So you're seeing the same type of thing in Singapore. You're starting to see in Dubai, in the UAE. You're starting to see that type of stuff crop up. So as we see the success, the sandbox model, I think we could easily see that type of thing pop up in various European countries and spread even further, because it's really demonstrated the benefits that it can provide to a local ecosystem.
Awesome. I think obviously we at Affinity are super biased. We're always going to say that networks are most important, and that networking effect and sharing information and sharing your network to access more deals is super important. But I guess it's good to hear that these smaller ecosystems that are growing, that they've got roots to.
Yeah. But it is, obviously we're on this call with some folks, but it's hard when you meet these companies and you might not be able to meet them again, like run into them sort of stuff. So it is useful to have platforms like Affinity, Deal Room, all of that sort of stuff, so that way you can keep track of these folks, because otherwise they can often fade into the ether. And it's painful having someone on your tracker who then raises a massive round that you met 2 years ago.
Yeah, you don't want to be having too many of those, for sure.
Yeah.
Absolutely. I can seriously recommend the reminder function on Affinity if anyone wants to explore that.
Yeah, we get that internally as well, saying you just a few emails you haven't replied to, so that's always good. But that's awesome. Thanks, guys. So Nick, I think we're going to go to you next, and then actually, Alex, I'd love to hear from you on this as well, because I know you guys have obviously huge fintech experience and financial services experience. So just Nick on this, certainly from the 2021 data, we're seeing fintech, and I think it's continued on, fintech, crypto as well, as a leading industry across Europe for unicorns, super hotbed, with way over 20% falling into this category. Is there a specific reason, outside of the obvious, why fintech companies are most successful at attracting investment across Europe?
I'd say, I mean, what's the obvious one first, Tom, so I don't say that one, because to me there's
I guess hype and FOMO, right? You've seen over the last 3-4 years so much money piling in to these names, these innovators in fintech, and all the various different banking service and payments service, and all these various different. So I think there was momentum, certainly was one where you kind of was a driver, but more fundamental. You guys have done many fintech investments. What what drives your thesis? What do you think is making this such a viable space to invest in Europe?
Yeah, so I think there's like probably a combination of a few things. One, the recycling of talent in fintech. So you've seen, these companies come to reach unicorn status, and then employees are being shed off of these companies, and then are starting something new, and there's like a huge snowball effect in that sense. And that's why I guess we're seeing lots of these companies getting funded. In terms of like how the market is able to sustain such large businesses, obviously finance is an incredibly deep market, and you basically lift the rug in any area of the financial value chain, and you're seeing businesses that are worth billions. There's the obvious ones like banks, but then insurance and capital markets, which to some people is very like gray in terms of actually how that market, the size of that market, but it's massive all across the stack. So I think you've seen that paired with, I guess, quite a forward-thinking regulator in some of these different jurisdictions. I think you're seeing health catching up because the regulators in health is catching up, and that's also driving more investment into that. But it's just like the market caps of all of these businesses that are the incumbents, so to speak, are incredibly large. I think people think the outcomes of these businesses will and should be massive.
Interesting. Alex, do you want to add to that? What your view is on?
Yeah. So I think if I had to give two reasons, they would completely contradict each other and they have the same term. So on my answer number one is good regulation. My answer number two is bad regulation. So on the good regulation side, obviously we mentioned the sandbox earlier. Payment Services Directive 2 in Europe has really, while its effects and the functions that can be provided from it maybe are yet to really push through into unicorns in a major way, I think it demonstrated a governmental level of support for fintech in general that made people really bullish. And here's an opportunity that's you're able to provide there. I think if I had to flip on the other side, obviously Europe is made up of lots of different countries, all with their own internal regulation. And so, if you start a company like Monzo or Tide in the UK, well, you need your Monzo and Tide's equivalent in France and Germany and so on. And obviously the success of Revolut is it's just been able to just splurge across the entire continent. But if you need to have that type of facsimile, and there's a barrier to entry from one type of highly regulated business moving into another country, then it just gives that time and that breathing room for for a competitor to emerge. And the space is so large that competitor is likely to become a unicorn.
Well, we've seen this with multiple places like Klarna and Adyen, and lots of people operating in very some tangential spaces as well. And there seems to be plenty of room for hundreds of companies operating in the fintech space. So super interesting. Orla, you touched on it there and previously. Health has been picking up as well, right? So health and transportation combined make almost a quarter of all European investments in unicorns. Do you think there's any particular reason you're seeing in the data why those industries are gaining ground alongside their fintech counterparts?
Yeah, I mean, I think they're big opportunities, basically. They're areas where people spend a lot of money, and so there's a potential to disrupt and take a small part of a massive market. If you look at fashion, it's an area where, if you're thinking about kind of personal expenditure, people spend less on that than they do on like their commute every year, or that they do kind of either directly or indirectly on healthcare. So I think that a lot of the kind of first wave of European unicorns or global unicorns came in areas that were actually relatively small markets. If we think about kind of media companies like Netflix, for example, but actually our media spend is much less than our education spend. And I think that there's going to be the next wave is really going to be in those areas that people that are bigger industries. So I think it's not really surprising to me that we're starting to see that kind of come through as there's more capital available, and people kind of really trying to create complex and interesting businesses around them. EdTech is the one area I'd say in Europe that is still really early stage, kind of compared to its legacy. I think Europe has got amazing universities and things like that, but actually it's still a really early stage industry in terms of investment, and that's why the multiverse round and kind of unicorn status was kind of interesting this week as well. So yeah, maybe we'll start seeing more in edtech as well.
Yeah, super. No, that's really cool. Okay, I think definitely both Nick and Alex have something to add on this. Maybe conflicting views, who knows? But Alex, I'll go to you. So what we saw, certainly from the data in 2021, was fashion, gaming, food, marketing together made up 20% of the funding, and seem to have a stronger presence in cities growing, seeing rapid growth like Germany and France. Are the reason behind these industries seeing more success in these markets more than others? Like you can see in this table, the distribution. I mean, fintech across the board, but then when you move lower down, you're seeing it's slightly different allocations by country. Do you think this is a unique thing in Europe, and do you think do you have any views on this?
Yeah, I think certain cities and startup hubs and countries that host those cities always have their strengths and their weaknesses, right? The thing that we've always people always say about London, for example, and not to always harp on about London, but that's where I am and know more about, is that you have government and finance and fashion and media all in one place. In the cases of France and Germany, it's going to come down to relative chance as to if your startup hub is in a location that has the historical incumbents that do those things, and the exited experts, or the people who are no longer in that ecosystem, are in that place. So am I surprised that fashion is third on the list in France compared to Germany? No, not really. Am I surprised that transportation is second on the list in Germany compared to France? Also, no, not really. So it really just comes down to what certain countries are good at and where they've historically had levels of expertise.
Nick, do you want to add anything on that?
I think it's essentially that, isn't it? And it's also there are investment firms who are focused on specific areas, right? And those investment firms will move to those hubs, or you will launch an investment firm in that hub because there's enough opportunities to warrant having a very highly specialized investment team. I think across all countries you're seeing like firms like Anthemis, right, which is dedicated to financial services, launching, but there are probably countries where there isn't enough of a market or amount of opportunities to launch these specialized funds for maybe some of the stuff straight down the list, right? And so that's why you see them sort of gravitate and grow these hubs.
Awesome. And do either of you guys think, or based on what you've seen in the last 6 months, are you guys seeing new sectors gaining more traction? Like, are you seeing more and more excellent companies from any of the spaces that are not listed on this?
Yeah, climate tech for sure.
Climate tech, okay.
Yeah, I'm surprised. I think if we look at this chart in a year's time, you'll see that one hurtling up the list, and for good reason. I mean, there's just an incredible amount of talent, which is, I think, whenever you have like a glaring world problem, smart people try and solve it. And if you look at all of the sort of the items on this list, they've all been, and still are, big real world issues, and climate tech is, without a doubt one of the key ones. And I think you'll see that fly up the list.
Are we going to get? Do we have a European climate tech unicorn yet?
I think we've got a few.
Really?
There's Northvolt is like they're Swedish. They'd be a climate tech.
So I guess maybe 2022 could be the year of the first UK one, or we'll see what happens. But okay, cool. Thanks, guys. And I had a question. So you guys mentioned to me a couple of times, which is really interesting, about exiting either founders or exiting senior members from unicorns, and then being recycled back into the system, and then nourishing the next. So considering the amount of growth we looked at 2017 to now, and the number of unicorns, do we think this is going to be sort of kind of continue to is this a trend we're going to continue to see? Like, is this going to be an ever expanding number? Because obviously the more unicorns, the more exits, the more unicorns, and then it's going to keep recycling again and again. And one final thing, do you think, are you guys seeing exits from large US unicorns returning maybe home to Europe, because we've got some excellent talent that left Europe, went to the US, and are now coming back and setting up their own businesses here. Are you guys seeing anything around that?
Sorry, remind me what the first question was.
So first one was, do you think that is this going to be self-perpetuating?
Yeah.
Is this going to continue to grow and exponentially, or is there anything you're seeing in trend?
So I think each ecosystem has a carrying capacity, basically, in terms of the amount of work it can do, and that comes down to the talent. So while in the early stages of an ecosystem's development, it's much more about who are the people who are willing to leave their jobs, or have the ability, frankly, to leave their jobs based off like excess money that they have laying around to not pay themselves for a couple of years, who are willing to start businesses, and then the funding in place and able to fund startups that run at a loss for maybe 5 to 7 years before they really make it big. That's the function at the beginning. I think that's the stuff that me and Nick have been talking about. But as these ecosystems reach the level of maturity of San Francisco or New York, you're probably going to come down to talent cost. And that's probably also one of the reasons why talent's much more expensive in the US than it is in the UK and the rest of Europe, is because there's the war for talent is really occurring over there. I was really kind of picking on your term self-perpetuating there. I think it's more of a logistic curve. It'll go up exponentially, and then it'll level off as there's just people around to actually man the businesses.
But the States is many years ahead of Europe in this cycle, right? And they're still benefiting from this self-perpetuating talent. But what you are seeing, which is to Alex's point, is that more and more hubs pop up, because essentially people get priced out of previous hubs. And if you look at the UK, really just London, which is where you see most of those unicorns residing, and maybe that will start to change as well. And you'll see other cities around the UK having more talent and people moving to those hubs where the cost of living and everything is more affordable.
Interesting. Okay. So let's just talk a little bit around around valuations and raising capital. So European unicorns raised over 45 billion of funding in 2021. 38% of all funding raised was by unicorns. Is it unusual for funding to be concentrated in unicorns? Why or why not? For example, we're talking about cycles again, is it a virtuous cycle? Do companies that are doing well attract more VC investment, or is it something else at work here? I'll go to you, Alex.
Yeah, so naturally, larger companies need more money if they're running at a loss than smaller companies, and so there's a level of selection that goes on there. Much of this comes down to the opportunities to go public. When you're at that late stage like that, we talk about there being IPO windows, and IPO windows opening and closing based on the whims of the public markets or things like that. I think a lot of money probably went to unicorns in the last couple of years because everybody was going public, and they had the SPAC market and things like that, and people were thinking that they could probably make a relatively quick flip over the course of 2 or 3 years, where they put a bunch of money in and come out 2 or 3x as much, or maybe even only 1.5x as much a little bit later on. As that IPO window is starting to close, and as we probably are going to see fewer companies going public over time, it'll go in one of two directions. Either we'll see an even more exaggerated market where lots of money is putting into these really late stage companies who have proven themselves to be successes, or who are the beneficiaries of the so-called flight to quality that we might see soon, and so they'll be proven out. Or we may see people who are looking for gains over a longer term period just really retrenching back into the early stages, and we may see a concentration there. So it's probably going to be a bit of a barbell, and I'm sort of curious to see where it goes.
Interesting. I love that. I mean, it's something I think everyone's talking about now. I mean, any company that's at later stages, that IPO window, I think they can feel it. The appetite is no longer there. Do you think that's stronger in Europe? Do you think, I mean, Europe, obviously the IPO market has never been the same as the US, but do you feel the window's more than likely pretty much closed now, or are we going to see anything, any real or do you have to wait and see?
I think it comes down to companies' fundamentals and where the multiples are standing, really. Much of the over-exaggeration in terms of multiples was present in the US compared to Europe. Obviously, we saw a number in Europe. I'm not saying there was none. But companies that aren't IPOing may be doing so either because they feel that there is enough capital available to them where they can stay public for longer and continue to become large and can develop their business model further. Or it's if companies aren't going public, it's simply because they are currently priced at a multiple that the public market is not going to be able to stand. So I think perhaps we, similarly in Europe to the US, are probably going to see a pulling back in terms of companies going public, because you did see that type of multiples appreciation. But maybe in 3 or 4 years, after you've had a couple of rounds of slightly more sensible valuations, you may see the window opening back up again as companies feel like they're in a decent place to sustain their value in the public market.
Makes sense. Orla, I think you might have some data on this. So European startups attract or have been attracting increasing levels of international investment. You mentioned that earlier on as well. Well, seeing far more diversity of where investment into European startups is coming from. When we looked at the data, US investors were accounting for about 35% of all funding. I'd say it's probably increased since 2021. Into Europe, up from 23% in 2017. So in the data, were you guys able to see why was this? Is there any sort of trend you're able to see from it, or insight? Was there?
Yeah, so a lot of it comes down to the fact that there were a lot of late stage rounds last year, a lot of rounds over 100 million, and that tends to mean that you're going to have both more investors and more international investors participating. So yeah, some of the bigger late stage funds or crossover funds that were getting involved in late stage deals in Europe last year, and just because that was where a lot of the growth was coming from, was in late stage deals. I think it followed on that it became more international as well. But it is also, again, that's something that's been happening for a number of years as the ecosystem has been maturing. So even now, if we were to drill down into some of the smaller, earlier stage ecosystems in Europe, you would see that there's a lot of the capital there is still pretty local, or at least cross-border European. But for those bigger companies, late stage rounds, yeah, there is a lot more US and Asian investment that's been coming into Europe.
Interesting. Nick, just very, very quickly on that one. I mean, you guys work very closely with a lot of US funds as well. Are you guys seeing more appetite for earlier stage deals from US investors, maybe looking at doing co-investment with you guys, or is that an attractive space for them at the moment?
Yeah, they are. And I think the biggest signal to that is the offices being launched in the UK by some of these US funds, right? Because if you're doing later stage investment, you can probably get away with not having a fully fledged team on the ground because the investments are more high profile and there's more of a process. But if you want to start going into the earlier stage, you really do need to have some sort of presence, because it just moves so much quicker and a lot of it happens off market. And there's a real intention, I think, by some of these US funds to come in, support the UK and wider European ecosystem. And this is not just UK, they're setting up offices all across Europe. And you're starting to see them knocking around more in earlier rounds that you historically, at least when I joined, I never saw them in there. So yeah, definitely.
Well, we saw Sequoia with their office, and I know Sequoia set up a huge scouting network across all of Europe. I think scouting in a few other routes as well is becoming more and more prevalent, which is a very US thing, but it's definitely becoming a networking effect to certainly be more prevalent. Okay, cool, thank you. So we looked at funding rounds. Yeah, so look, I want for time, I'm going to kind of continue to move on. So one of the areas here that we looked at was networks. So this is something that we kind of again, we're going from scouting to networks, and when we looked at some internal data, so when we looked at the Affinity customer base, and this was looking at Affinity customers who invest in European startups and European unicorns. So it's more focused on what trend data we could see. So we could see from 2019 to now. Now, obviously, let's take into account COVID, right? So we're not just completely discounting that, but we definitely saw from 2019 to now, we saw a decrease in the growth rate of our clients' networks. So in other words, the sheer number of new names and new contacts they're putting into Affinity. But we did find that warm introduction rates have continued to increase, right? So referrals and intros from other investors or other introducers have definitely increased. Have you guys in your firms felt a similar shift in your firm's networking approach from quantity to quality more so, and that you're spending more time on sort of higher quality relationships and deals than maybe pre-COVID?
I think, we look at our conversion rates quite often from the different steps in our funnel, if you will. So from like seeing a pitch deck to the first meeting, the partnership meeting, and interestingly, like in 2020, we had quite low conversion rates. So we were seeing lots and lots of businesses, and they weren't necessarily translating through to signed term sheets. The last 2 years, I think that conversion rate has actually shifted a little, and we're seeing a higher concentration of companies that we're seeing, and then that ended up moving to funding. I think what's changed is that once you've made the call and you say we've got conviction, we really want to make this investment, it's becoming more and more competitive. There's more people around the table who can essentially invest in that business. So while we're probably seeing more accurate and we're probably getting better at pre-qualifying businesses quicker, once we've made that call, it seems like everyone else is too, right? Because we're seeing them popping up.
Very good. So so Alex, how are you guys, maybe reducing that noise, if you agree with Nick that you're maybe moving more to sort of higher conviction, higher quality, spending your time on those more deals? How are you guys kind of reducing that noise and narrowing your field of vision down so that you can move quicker?
I think it's very unfortunate to say, but I think the noise will be decreasing itself over the next period of time. We may not have to do much at all. I think what we saw over the last 2 years was it becoming incredibly fashionable to start a company, and there are an explosion of tools that allow people to do it, and an explosion of capital that's willing to support people at the early stage. And similar to Nick, we had to sort of speed up our investment processes. Maybe if you let slip that you're looking at a certain deal, then it could quickly slip out of your hands. Now going forward, we are quite grateful that we get to return to 2018, 2017, 2019 kind of era of due diligence, where we can take 4 weeks, 6 weeks to really examine a deal and get to a high level of conviction that we want to invest on it, rather than being rushed off our feet and have to do it in 2 weeks and really scramble on a deal. So I think the focus will come from the timescales, frankly. I think founders will know, or will come to learn just through exposure to the market, that they can't get the normal people can't get around done in a week. I know there's some incredibly high performing startups that are able to do that, and probably still will be able to do that. Yes, as we go forward and we start deploying into stuff, we're definitely going to be focusing more. But I think that's really just a function of the resource in the form of time that will allow us to do so.
Very interesting. And so, I mean, when we looked at the numbers, we saw. Now, again, this is going to go into your saying it's going to naturally reduce that noise, maybe. But do you think, so when we looked at the data, 2020 and 2021, there was 40% increase of deals. There was 41% more increase in deals. Do you think, have you guys seen since 2020, end of 2021 to the last 6 months, do you think your overall deal count is going up?
I think 2021 is a really misleading year. And partly that's because a lot of portfolio companies, companies we work with, who maybe necessarily didn't need to raise, would say this is actually a fantastic time to raise, right? Because it's very buoyant. There's lots of investors out there. So that, I think a lot of that 41% increase in new deals is frankly a lot of businesses who decided to take advantage of a really favorable tailwind in the market and go out and launch fundraisers maybe ahead of when they planned to. So I think probably the next few years will look a little bit more like 2020 than 2021 going forward.
Fair enough. Great. So again, so this kind of goes in again, feeding into what we were talking about. So we added in 2019 data to this slide because previously we were just looking at the COVID years. But we looked at, again, Affinity data, looking at Affinity customers, and we also narrowed it down. We looked at Affinity customers who were investing in European unicorns, so participated at some funding round with a European unicorn, and we just looked at the activity data. And I mean, the numbers are really interesting, but again, to your guys' point around, reducing noise, focusing on better quality, and actually maybe taking more time on deals, doing better DD. But maybe it would be interesting to get your guys' views on, day-to-day productivity and activity and spending time on what's important. We just very briefly on this, you can see, so I was shocked. I actually had to go and double check with our guys who produced this data on just the sheer number of average emails a firm sends out. Like, the numbers of 128,000, but like if you've got a 20-man firm or 25-person firm, that's only 6,000 emails a year, right? And if you break that down again, so really the way in which VCs are spending their time, one thing that stood out to me, and maybe this is interesting for you, or you guys can give me some feedback, external meetings, right? So how was filling up most of your diary? Are you guys seeing this year now in 2022, how are you spending your time? I'll give it to both Nick and Alex. Are you doing more external meetings? Are you spending more time and doing less meetings, but focusing with either portcos or individual deals? I'll go to Nick first. How are you spending your time?
I think, so Octopus, we're a rolling fund, so we raise capital every year, and therefore we, our appetite to deploy doesn't really change as much. And we do believe that at times like this, you can build incredible businesses. Like we invested in Zoopla in 2008. There's a whole host of reasons, and one of that is talent. So talent becomes, last year talent was just off the chains, hard to get anyone, right? So you're basically sharing a small pool of talent amongst a bunch of great companies, and as there's less people bidding on that talent, you can basically make better hires. So we actually think that founders and businesses that are well capitalized and have an appropriate burn can build incredible outcomes during these periods. So we're like trying to ramp up actually as many external emails as we can, and really continue to do what we've been doing for the past few years.
Great. I guess, of course, again, speaking from Affinity, it's super important then that what you are doing, you are tracking, and you are.
And let me know if our team is slacking on external emails, Tom. I'll feed that message back. I'd be disappointed if we were shrinking our external email outreach. That's good data.
Yeah. Well, I mean, luckily, you guys can just run a report and you can see all the productivity for the whole firm, right? So yeah. I'm sure the partners are already running that once a day, once a week. So
yeah, I'll probably be dead last on that one.
That's great. So look, guys, we're getting close to the full time now, but I guess I want to thank you guys very much for today. It's been really, really interesting. We've covered a lot. We could have kept going on this for a long time. The last thing, obviously this report's coming out in 2 days, but lastly, I'm just going to ask you guys, all three of you, in your views, 2022, 2023, are we going to see more unicorns? And if you were to pick, 2 or 3 countries that you think are going to be the next ones to really watch out for in regards to unicorns, what would your predictions be?
I know we'd quite like to end on a hopeful note, but I may say something a little scary, which is I think we may in the next couple of years see some decorning, with some companies' valuation going from above $1 billion to less than $1 billion. So I would be hoping and praying for unicorns out there that they're able to hit the sort of metrics that they raised on, and people have raised a lot of money and they probably have quite a long amount of runway, and so they should be able to grow and develop over time. I think the rate of minting new unicorns is probably going to decrease for all the reasons we've talked about in terms of capital flows decreasing and valuations returning to previous sort of 5 years previously levels. But one area that I would look at is the south of England, outside of London. So you was on the chart earlier, Cambridge and Oxford. Biotech we haven't mentioned at all in this webinar so far, but I think the opportunities coming out of biotech are enormous, and I think VCs are starting to appreciate and learn how to diligence biotech more over time. So I would be looking at your biotech hubs. I'm sure there are many across Europe as well. So any city that is in proximity to a strong pool of talent when it comes to biotech, I think is probably going to be something that comes quite interesting over the next few years.
I'm seeing so many new deep tech funds, and with so many more deep tech focus, it's really amazing to see, like, cryptography stuff and loads of other, other interesting stuff. Nick, what do you think?
I really agree with Alex's point, actually. I think that university spinouts in the UK have struggled a little compared to America, and frankly, a lot of times it's due to the university and how they handle those spinouts, but that's changing as well. So I think there's going to be incredible opportunity with some of these university spinouts, because UK has just got an amazing university infrastructure. In terms of like country that I guess we haven't talked about would be Spain. There's a large amount of unicorns being produced in Spain, and actually I think you're going to see that same sort of talent snowball effect happening there too. And I wouldn't be surprised if Spain was on all those lists that you showed in maybe a couple of years as well.
Awesome. And Orla, actually, I just want to add as well, like, I mean, I guess this goes to the final thought as well. Just on like the use of technology and the use of tools and the use of data, like how central do you think that is for understanding the unicorn market and actually for the success of finding these deals?
Yeah, I think essential. I mean, VCs are our clients, and we were talking about spinouts and also about how much more competitive the entire market is getting. And what we are seeing already is that people are investing earlier and earlier, and that means that people are starting to look for companies before their companies. They're looking on university campuses to see what company might be spinning out next. We do now track spin-out data as well on Dealroom, in case people are interested. But yeah, I mean, I would completely agree, like looking at some of the great universities and what's happening there. I think that there is some education needed with some of the universities about maybe don't stifle your companies with your knowledge transfer terms and IP terms. That's somewhere that Europe does have a fair bit of catching up to do. But I think that that's going to require a bit of ecosystem collaboration and education. But yeah, I would say spinouts for sure, universities, and then also maybe the Nordics. The Nordics are incredibly impact focused as ecosystems, also very entrepreneurial anyway. And to Nick's point earlier about climate tech, there's some very cool impact and climate related stuff happening in Norway and Sweden. And Finland as well. So yeah, maybe that.
Cool. That's great. Thank you so much for today, guys. Thank you, Nick from Octopus and Alex from Antimus and Orla from Dealroom. We're super excited about our partnership with Dealroom going forward as well. So like producing reports like this and having discussions like this. And again, thank you guys. It's always wonderful to have our clients and our friends on to discuss these kind of things. So thank you very much for today, guys. And
thanks for moderating it, Tom. It was great. And I'll be sure to run these reports once we break off this call.
Exactly.
Yeah.
If you guys, I mean, you guys are, if everyone's going to be spending more and more time on better and better deals and spending more, you need to be on top of the data and you need to be on top of the activity, right? So we can't be investing in tech and not using it, right? So we've got to. Okay, thank you all, guys. Really, really good. Thank you very much.
Thanks, Tom.
Bye.
Bye, guys.